What is a dividend stock? As the name suggests, it is an ownership share in a company. The company tends to distribute a portion of its profit regularly to the shareholders. As a result, a shareholder can build long-term wealth with the help of a steady stream of income. How do stock dividends work? You may wonder how stock dividends work. Remember, it is paid per share of stock. For instance, if you own 30 shares in a company that pays $3 in annual dividends, you can make $90 per year. A shareholder usually has a brokerage account, and a company pays in cash to that account. However, some companies pay dividends in new shares of stock. As a shareholder, you can also become a part of dividend reinvestment programs, known as DRIPs, offered by the company. Investors can reinvest in the company's stock, and it happens often at a discount. Types of dividends. Those dividends that are paid on a company's stock are the most common ones. Moreover, there are two other types of dividends as well, which are as follows. A special dividend. On a company's common stock, it is a payout on all shares. But it doesn't occur, which makes it different from a regular dividend. In order to distribute profits, the company usually issues such a dividend. Remember, these profits are accumulated over several years. A preferred dividend. Such a type of dividend is issued to owners of preferred stock. When it comes to preferred stock, it is a type of stock that functions more like a bond as compared to stock. It is fixed quarterly payments. For that purpose, dividends on preferred stock are usually fixed as compared to dividends on common stock. Why do people invest in dividend stocks? Do you wonder why people invest in dividend stocks? Most of the investors rely on them as a source of income. Companies tend to pay their dividends at different times, so you can create a schedule to obtain a dividend check every month in a year. Moreover, young investors can reinvest them as they may not be income now. As compared to bonds, dividend stocks get benefit from higher yields when interest rates are relatively low. As a result, it offers potential for share price, where a low share price can get you more shares per dividend. Why companies pay dividends? Dividends are not less than financial health, therefore a company usually offers them to attract more investors. It helps the company to drive the share price up. Those companies that require less capital reinvestment tends to pay a dividend. Moreover, companies pay dividends after covering operating expenses and reinvestment where the money is left over. How often are dividends paid? Most companies pay dividends quarterly in the United States. Some pay monthly or semi-annually as well. Each dividend must be approved by a company's board of directors. After that, the company will announce the amount of the dividend and the ex-dividend date. Most importantly, investors should own the stock by the ex-dividend date to receive the dividend.